Okay. So yeah, we had some Australian news a bit further down, which was the GDP, and it actually came in positive for the GDP, but it just wasn't, it's not enough to change the trend of the market. Notice that, right? Notice that this has been trending downwards for a long while. It's a very old this, okay. It's been trending downward for a little while. And it's been trending down hard from the previous interest rate decision that was last month, right? So last month's interest rate decision caused a big drop in the Australian dollar, and it continues to fall. So in reality, we had a positive Australian GDP, but then the balance of trade is negative as well. So all in all, with the interest rate staying as it is, balance of trade being negative, I would say that this Australian, we're still having a bias for a move to the downside on this Australian dollar right here. So this was the trade setup that we had to continue selling this Australian dollar. This was from the non-farm payroll here, and then the interest rate just sort of helped us along in that regard. So there we have it. I will continue to look for selling positions on this, but at the moment, pretty much range bound for the past week. Didn't really go anywhere. Tuesday, Wednesday, Thursday, Friday has been all in a range. Okay. The next one is the NZD USD, which kind of runs similar with the Australian, right? Pretty similar in terms of it's trending downwards at the moment. And whenever I say it's trending downwards, I want to go out on a bigger time frame, like for example, the daily, right? And the daily is really going to give you where a true trend of the market is. Okay, nothing lower than the daily will give you where the true trend of the market is. So whenever you're trying to figure out where is this market trending at the moment, go to your daily time frame. Now, you really want to understand why it's trending in that direction. And this is why we have the fundamentals and why we do the fundamentals. So we get a feel and we know exactly why it's happening. And we take a note of that. And the reason why we take a note of that is because we want to know, right, what is driving the market currently, right? What is the current drivers of the market? And once we know what the current drivers of the market are, unless something comes and supersedes that, then we just continue in that direction, right? Until something, and when I say something, I mean something fundamental supersedes that, then we just continue in the same direction. So at the moment, we're still pretty much trending downwards, unless we have something that is positive for the NZD or negative for the US. We're potentially just going to continue going to the downside. Now, let me give you an example. This happened this week of some news that was, let's see here. That was positive for was pretty much the same, really. let me just see something here. 2 seconds. Oh. Okay. So on Friday, we did have some positive news. That was Wednesday. Friday, right here. Okay, okay. Right. So this inflation, this was positive news for the, I mean, it shows it kind of neutral here, but it really was positive news for the German. And if we're trading the German 30, for example, let's go down to this time frame. We had positive news, but look at what happened. Right? Massive, massive candle when the news came out. Positive news, right? But look, massive, massive push to the downside. And that is what we consider a liquidity hunt. All right. That is what we consider a liquidity hunt. Taking out stop losses and getting ready to turn. Remember that the market needs some sort of liquidity to be able to move. Okay. It just can't turn around and move. Right? It just doesn't turn around and just jump in the next direction without getting some sort of liquidity. The same thing really happened on this German 30 up here, right? So right here, on this day, right here, we had negative news for German 30, right? The GDP had fallen in the German economy on this day. This was in July the 28th. And notice that it never turned around immediately to fall out of the sky. And the reason for that is that the market needs some sort of liquidity. It needs enough people to sell from to be able to cause this big drop off. Okay. So even though we had negative news, it still needs that liquidity to move, to make it move or to turn. So I believe that that's kind of what we're seeing here now. Okay. It was looking for that liquidity on Friday, and it did that big move to the downside. And now we saw it actually recovered. So it grabbed the liquidity, it recovered. Okay. And I'm looking for potential for some movements back up to the upside here on this German 30. So keep an eye on that one, right? Keep an eye on that one. If you're into trading the indices, German 30 definitely a lucrative indice to trade if you are into that. Okay. So then again, we use our command control levels to find ourselves some decent entries. US 30 was pretty good for us as well. If we continue on the indices here. This one. There we go. All right, so we sold US 30 right at this level, right at our command control level right here. You could see it. Okay, we got a nice little bias because of what was happening in the US economy. And you know how we did a thing, and boom, fell out of the sky, tapped our entry, and then 2 days of falling, right, before it seemingly now wanting to recover. So that was a nice little trade there. The same thing happened on NAS as well. Okay. Same thing on NAS. Had a nice entry on NAS, and then it dropped out of the sky 1, 2. Now it hasn't come to take profit target 3. We'll probably leave that one up. Forget about take profit target 3, reassess the situation, and see whether it's actually starting and ready to turn around. SPX, we had a similar idea, but it missed our entry. And that happens from time to time. No stress there. But look, it missed the entry by a few pips, and fell out of the sky. But there we go. Okay. So we'll reassess the situation and see how we'll play these indices for this coming week. And one that we definitely want to keep an eye on is the US oil. All right. US oil. Okay. Now, we're in bias for the buy. And we're looking for the buy just here. We got in a little early. We got stopped out, right? Which is all well and cool. But we still pretty much biased for the buy side on this US oil. Just because of the fundamental news that's coming out on that oil, right? We're pretty biased on the move to the upside. Got stopped out here, but I'll just look for a re-entry. And that's trading for you, okay? Even though you have the direction right, sometimes stop loss might be a little bit too tight. And that we just deal with that accordingly. Don't over leverage your account, and you'll still be in the game. So it's all cool, right? So I'm keeping an eye on this US oil for continuation to the upside. Let's see what's happening in the calendar for this upcoming week. And we know exactly what we need to focus on. So people ask, so do you trade everything? And the real answer is you only trade what we have information for, okay? And that's what we should really be trading, because to make a sensible trading decision, you really need decent, solid information, okay? You need decent, solid information so you can make a nice and objective decision when it comes to valuing or getting a sense of what investors value these assets at. So this coming week, all right, we've got inflation rate for the US. That's a huge one. We have GDP as well for the pound. Employment change for the pound. That's big. That's gonna be on Tuesday. So we could see that Monday there's not really that much action happening. So in reality, we should probably just sit on our hands tomorrow. Don't really do anything. The real action starts on Tuesday, and then we do have action for the pound on Tuesday and Wednesday morning. Then in the New York session, wow, this week is US heavy. So Wednesday, Thursday, Friday, US. And when it comes to Thursday, Australian. When it comes to Friday, Australian and New Zealand. Now, the reason why I say Australian and New Zealand, even though you don't see Australian and New Zealand here on Friday, is Australia and New Zealand are very big trade partners with China. So if China sneezes, Australia and New Zealand catches a cold. So this is why we look at the fundamentals here of what's happening in China, so that we get a flavor of how things may play out in Australia and New Zealand. Okay, so in terms of the assets that we'll probably look at this week is the pound, the US, the Australian, the New Zealand. right? That's it. We don't really have to look at anything else. Of course, if we're looking at the US, gold is involved in that as well. And the indices, and the US indices, okay? So SPX, NAS, and US30. So still a lot of options for trading. We don't have to try and veer off to anything else, right? We don't have to try and find a trade on CAD or anything like that, because there's literally nothing really happening on CAD this week. Okay, and we just have to stick with that. All right. So that's how we're going to leave it for now. As always, we'll do our fundamental analysis, and we'll post that through as to how things may flow from one asset to the next. I'm gonna make an announcement next week with regard to supporting people who want that fundamental analysis and understanding a bit deeper. I'm gonna make an announcement next week regarding that. All right. And as always, I'm gonna wish you a fantastic week of trading. I'm wishing you all the best. Solid trading. Make sure that you manage your risks appropriately, and make sure that you're choosing the right funded companies to do your funded accounts. We spoke about this last week with funded accounts. Very, very important. All right. So have a fantastic week. I will see you on the inside, and we'll continue with our analysis and navigating and dancing with the markets as we like to do. Until then, bye-bye for now.